Good morning, everyone. This is Marshall Giller bringing you the morning comment for February 12th. The Eurozone finance minister's first attempt to deal with Greece's new demands broke down last night. After 6 hours of talks, the two sides left the meeting with no further talks scheduled before another meeting of finance ministers next Monday, which is the deadline for reaching some agreement to extend Greece's current bailout program. It's rather incredible to me that the market doesn't seem to care about this development. Eurodollar is virtually unchanged. That makes the euro actually the best performing of the G10 currencies against the dollar, which gained against all the others, as two more Fed officials came out overnight in favor of tightening. Investors apparently have a lot of faith in the ability of Eurozone finance ministers to pull a rabbit out of their hat at the last minute. Now, that's the way all the Eurozone crises have been resolved to date. They managed to reach some agreement at 11:50 p.m. on Sunday night, usually by Germany giving in. The Greek government was elected with a mandate to renegotiate the country's debt, but not a mandate to leave the euro, so there's some pressure on it to compromise as well. In any case, even if they miss next Monday's deadline, the real crunch won't come until the 20th of July, when 3.5 billion euros in bonds come due. So there's plenty of time for more posturing and more volatility. Australia's unemployment rate unexpectedly jumped in January. The market now sees a bigger chance of a rate cut in March. I remain bearish on the Australian dollar. As for today's highlights, during the European day, the main thing is going to be the Riksbank monetary policy meeting and the Bank of England quarterly inflation report. Following the recent improving fundamentals in the Swedish economy, the pressure on the bank to introduce additional measures has lessened. We don't see them taking any more concrete easing steps at this meeting. Given the market's expectation that Sweden's next in line to come up with further easing measures, such an outcome would probably cause the Swedish krona to strengthen, at least temporarily. As for the Bank of England, the November inflation report warned that inflation was expected to fall below 1%. This time they might say that inflation could even turn negative over the next couple of months. That could push rate expectations out further and weaken sterling. In the U.S., headline retail sales for January are forecast to fall at a slower pace from December. The focus, however, will be on the core figure, as the headlines can be distorted by low gasoline prices. The forecast is for the figure to rise, a turnaround from the previous month. That could strengthen the dollar a bit. Initial jobless claims for the week ended February 7th are also coming out. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.